Have you ever heard the saying, buy low, sell high? This video dives into the world of value investing, a strategy that focuses on finding undervalued companies, the financial equivalent of a diamond in the rough. We'll explore if value investing is truly making a comeback, and if you skip this, you could be missing out on a time-tested approach to building wealth. Is value investing the secret handshake to unlocking your financial future? Stick around to find out. Hey everyone, and welcome. Today we're talking about value investing. It's a strategy that's been around since your grandpa was rocking bell-bottoms, but it seems to be having a major moment right now. Lately, we've been hearing whispers of a resurgence. Is it real, or just financial folklore? And more importantly, should you care? Because let's be honest, nobody wants to be the last one to the party. Especially if that party involves making money. Value investing is all about finding companies that are like the wallflower at the dance. They're trading for less than they're actually worth. Think of it like finding a vintage Rolex at a thrift store for $5. You see the potential, even if nobody else does. Value investors are basically financial treasure hunters. They're looking for companies with strong fundamentals, things like solid earnings, a mountain of cash, and a balance sheet that's healthier than an Olympic athlete, but for some reason the market hasn't caught on yet. Maybe the company is in an industry that's about as exciting as watching paint dry, or maybe there's some short-term bad news that's got investors running for the hills. Value investors see these situations as opportunities, like finding a $20 bill tucked inside an old library book. Now, the opposite of value investing is growth investing. Growth investors are like those people who are always chasing the latest shiny object. They focus on companies that are growing faster than a chia pet on steroids, even if their current earnings aren't that impressive. They're basically betting that the company will keep growing like crazy, and that the stock price will eventually catch up. Growth investing has been the IT thing for a while, especially with all the tech companies going bananas. But some analysts think that growth stocks have become seriously overvalued, like paying $100 for a pair of ripped jeans just because they're trendy. And they believe that value investing is about to have its revenge. So why the whispers of a comeback? Well, a few things could be happening. First, as I said, growth stocks have been on a wild ride, and some think they're due for a reality check. Second, rising interest rates can make it harder for growth companies to borrow money and fuel their expansion. Third, value investing has historically outperformed growth investing over the very long haul. We're talking decades, not weeks. Although it's worth noting that there can be long stretches where growth stocks are the kings of the hill, and value investors are left twiddling their thumbs. It's kind of like the tortoise and the hare, except sometimes the hare wins the race too. But is value investing right for you? Well, it depends. Value investing requires the patience of a saint. It can take a while for the market to realize that you've found a hidden gem. It also requires the discipline of a drill sergeant. You need to be able to resist the urge to jump on the latest bandwagon and stick to your guns. If you're looking for instant gratification, value investing might not be your cup of tea. But if you're a long-term investor who's willing to do your homework and play the waiting game, value investing can be a fantastic way to build serious wealth. Now, let's get down to the nitty-gritty. How do you actually do value investing? It's not as simple as just buying the cheapest stocks you can find. That's like thinking you're a gourmet chef just because you can microwave a Hot Pocket. You need to do some serious digging and analyze companies like you're Sherlock Holmes on a financial case. Some key things to look for include a low price-to-earnings (PE) ratio. This compares a company's stock price to its earnings. A low PE ratio can be a red flag, or it can be a sign that a stock is criminally undervalued. You gotta dig deeper. A juicy dividend yield. This is basically the cash a company pays out to its shareholders. A high dividend yield is like getting a little bonus for owning a stock. A rock-solid balance sheet. This shows a company's assets, liabilities, and equity. A strong balance sheet is like a company's financial backbone. You want a company that's financially healthy, not one that's teetering on the brink of disaster. Hidden assets. Sometimes companies own stuff that's worth way more than their stock price suggests. This is like finding a buried treasure chest. Finding these undervalued companies takes time, effort, and a whole lot of brainpower. You'll need to read financial reports until your eyes cross, analyze industry trends like you're a Wall Street Nostradamus, and understand the company's business inside and out. It's not easy, but if you do it right, it can be like printing money. Legally, of course. Value investing is a tried-and-true strategy that can be a goldmine for long-term investors. While its recent resurgence is a hot topic, remember that all investment strategies have their ups and downs. Whether value investing is the right path for you depends on your personal situation, how much risk you can stomach, and what your financial goals are. Tired of feeling like a financial newbie? Make sure to like and subscribe for more gold nuggets.